tax break that President Obama has proposed, and I don't know. I'm just going to tell you what it is right now because I'm not quite sure. I need to read more analysis of it, to be honest with you. But as it stands now, if you are an American company and you are earning profits overseas, you are responsible for a 35% tax rate when that money is repatriated. However, that is offset by any taxes you pay in the country in which that money was made. So if you made that money in Ireland where the tax rate is 12%, you owe another 25% or 23% when you come back, when you repatriate that money. And in some instances, they don't repatriate it ever. In some instances, if you're Apple, you keep this money offshore for a long time. And even when you do stock buybacks, you borrow the money to do that against the money that you've been keeping offshore as collateral. Because what you're waiting for is what happened in 2005, I believe it was, the American Jobs Creation Act, where this money was able to be brought back into the country, repatriated at a 5% tax rate. And in which instance, if you had paid any taxes over it overseas, you probably didn't have to pay anything. Well, instead of creating jobs, in fact, that was used for stock buybacks. That was used for bonuses, and a lot of people lost their jobs. It didn't work. It was a lie. Of course it's a lie. They're not, companies are taking this money back to hire more employees. If they have a demand, they'll hire more employees regardless of what their tax situation is. That's just the way that business works. Even though I'm not a manager of a Denny's, I know that. And so the president here has been pressured for another tax repatriation holiday. And instead of doing a 5% repatriation holiday, he's saying there's going to be a one-time 14% tax on this cash being held in foreign tax havens. And so there will be some tax obligations supposedly going to raise closer to $300 billion. Not bad. At least it's not 5%. And then going forward, a 19% tax rate on all foreign profits, whether you repatriate or not. Understand, this whole deal where companies don't have to pay taxes until they repatriate this money, that's a tax break. The Eisenhower administration provided that tax break to corporations to promote U.S. businesses overseas. Well, we don't need that promotion anymore. If anything, we need the reverse. So this is a 19% tax rate. How much taxes it will capture, I don't know. I need to read the analysis, but I don't think it's going to actually get that much because it's offset by what they pay in that country. But there would be also a crackdown on tax avoidance. So this game where a U.S. corporation will take its most valuable assets, transfer it to a subsidiary, I should say, in a foreign country, so that that subsidiary is making all the money and it's made there and has nothing to do with the U.S., that game, I think they're going to try and shut down. Now, I don't know that any of this is going to get passed, but it's encouraging at the very least insofar as the Obama administration so far is not coming out with a 5% repatriation. That's it, nothing else. So we know they're not going to do what Bush did. Thank heaven for small favors.